I have been a numbers person my entire life. 40 years as a certified accountant will do that to you. I noticed errors in restaurant bills before the server reached the table. I caught discrepancies in spreadsheets that 3 other people had already reviewed. Numbers were my language, clean, precise, honest in a way that people sometimes aren't. So when I tell you that one wrong digit cost me 11 years of retirement contributions, I want you to understand that this is not a story about someone who wasn't paying attention. I was paying attention. I had been paying attention for 40 years. The digit wasn't mine. It was entered by a state clerk in 1999, on the day I enrolled in the Arizona State Retirement System. A single transposition, 2 numbers swapped in my employee identification code. 7 digits entered correctly. 1 entered wrong. For 11 years, every contribution I made from every paycheck went into someone else's account. The state knew. Their system flagged an anomaly as early as 2003. No one called me. No one sent a letter. No one did anything at all. I found out on a Tuesday afternoon in April of 2011, not because anyone told me, but because I happened to pull my retirement statement for the first time in several years, and the balance was roughly $140,000 less than it should have been. The woman who received my contributions for 11 years did not want to give them back. Neither did the state. My name is Carol Simmons. I am 65 years old and I live in Mesa, Arizona. I spent 40 years working as a certified public accountant, the last 22 of them in the accounting department of a mid-sized school district in the Phoenix area. I retired at 64 on my own terms, and I am telling you this story now because I have had enough time to understand what happened and to say it clearly without the anger getting in the way. The anger was real. I want to be honest about that. But anger makes for a poor narrator, and I have spent my whole career presenting facts accurately. I will do the same here. If you are watching for the first time, please subscribe and leave a comment telling me where you are from. It means more than you might think to know who is listening. Now let me tell you how 11 years disappeared from my retirement account, and how I got them back. I grew up in a family that did not have money but understood the value of it. My father was a machinist. My mother worked part-time at a dry cleaner. They owned a small house in Tucson, drove used cars, and never once went on a vacation that required an airplane. What they did do, without exception, was save. Every week, a portion of whatever came in went somewhere it couldn't be easily touched. My father called it setting it aside before you have a chance to spend it. I inherited this instinct in full. When I started working at 23, I enrolled in every retirement contribution plan available to me. When I moved to the school district at 42 and enrolled in the Arizona State Retirement System, I did so immediately, at the maximum contribution rate allowed. ASRS, the Arizona State Retirement System, is a defined benefit plan, which means that contributions go into a pooled fund managed by the state. And upon retirement you receive a monthly benefit calculated by a formula based on your years of service and final salary. It is, for most state employees, the foundation of their retirement security. My contributions were deducted automatically from each paycheck and remitted by my employer to ASRS. I reviewed my annual statements when they arrived. The numbers looked reasonable. I believed, building something solid. What I did not know, what I had no reason to suspect, was that I had been assigned the wrong employee identification number at the time of my enrollment. The error was simple. My actual ID number ended in 47. The clerk who processed my enrollment form entered 74. 2 digits, transposed. 1 keystroke in a different order. In a well-designed system, This error would have been caught immediately when my employer submitted my first contribution and the system tried to match it to my record. In the ASRS system, as it existed in 1999, the match was made to whatever account held the ID number that was entered. The account that held ID ending in 74 belonged to a woman I will call Ruth, a fellow state employee, working in a different department in a different city, who had been enrolled in ASRS for several years before I arrived. My contributions began flowing into Ruth's account in January of 1999. They continued to flow there every 2 weeks for the next 11 years. Ruth did not report this. I have thought about this for a long time, and I have tried to extend her the benefit of the doubt. It is possible she noticed the increase in her balance and assumed it reflected strong fund performance. It is possible she reviewed her statements infrequently and simply didn't catch it. It is also possible she noticed and said nothing, because the money was there and no one was asking questions. I cannot know which of these is true. What I know is that for 11 years, she said nothing. The state, for its part, flagged the anomaly in 2003. I know this because I later obtained internal ASRS records through a public records request. Those records showed that in November of 2003, an automated audit identified a discrepancy in the contribution history associated with my Social Security number, contributions being received that did not match the account on file. The file note from that review read, "Employer contribution discrepancy, possible ID error. Follow-up required." The follow-up did not happen. The flag sat in the system for 8 more years. No one called me. No one called my employer. No one called Ruth. The contributions continued. The first sign came in 2006, and I missed it, not through carelessness, but through a failure of imagination. I pulled my stress statement that year because I was doing some informal retirement planning, running numbers, estimating what my monthly benefit might look like at various retirement ages. The balance seemed lower than I expected. I went back and checked my contribution history and found that the total contributions listed were somewhat less than what I calculated I had paid in over the years. I called ASRS. A representative told me that the statement reflected contributions received and credited to my account. She said it was possible there were timing differences in how employer remittances were processed. This explanation was plausible. I accepted it. I was busy. It was mid-tax season, which for an accountant means existing on coffee and determination, and I did not push further. I made a note to follow up. I did not follow up. The second sign came in 2009. I was updating my personal financial records. I do this every year in January, a habit I develop early in my career. And I noticed that my stress balance had grown by less in the previous year than I would have expected given my contributions and the fund's reported performance. I calculated what the difference should have been. It was approximately $8,000. I called ASRS again. This time I was on hold for 40 minutes. When a representative finally answered, she told me that 2008 had been a historically poor year for pension fund investments and that many members' balances had been affected. She said this in a tone that suggested the question was somewhat naive. 2008 was indeed a catastrophic year for investment portfolios. I knew this. I accepted the explanation. What I didn't do, and this is the thing I have revisited many times since, was ask for a detailed transaction history. Not just my balance, but every contribution received, every quarter, with the corresponding employer remittance records. If I had asked for that, I would have seen the gap. The contributions my employer was sending were not matching what was being credited to my account. I was an accountant who had spent 40 years asking exactly that kind of question for other people. I didn't ask it for myself because I trusted the system. I trusted the state. I trusted that if something was wrong, someone would tell me. No one told me. The third sign, the one that finally broke through, came in April of 2011. I was 55 years old. I had been with the school district for 13 years. I was beginning to think seriously about when I might retire, and I sat down one afternoon to do a comprehensive calculation. Years of service, projected final salary, expected monthly benefit. To do this accurately, I needed my actual contribution history. Not the annual balance summary, the full transaction record. I logged into the ASRS member portal and requested the complete history. What came back stopped me completely. The contribution history showed deposits from my employer. It showed the correct employer name, the correct pay periods. But the amounts, individually small, easy to overlook in a summary, added up to significantly less than what I had contributed over 13 years. I got out a spreadsheet. I pulled 12 years of pay stubs. I keep everything, and I calculated, to the penny, what should have been remitted to ASRS on my behalf since January of 1999. The number I came up with was $283,400. The number in my ASRS account was $141,200. I sat at my kitchen table for a long time looking at those two numbers. Then I called ASRS. The call took 3 hours and 4 different representatives before I reached someone who could actually pull the records I was describing. Her name was Diane. She was a senior accounts specialist, and when she looked at what I was showing her, my own calculation, my pay stub history, the 13-year discrepancy, she went quiet in a way that told me she understood immediately what she was looking at. She put me on hold for 11 minutes. When she came back, her voice had changed. It was carefully neutral, the voice of someone choosing their words very precisely. She said there appeared to be a historical enrollment error associated with my account. She said she was flagging it for review by their compliance team and that someone would contact me within 5 to 7 business days. I said, "Diane, I've been a CPA for 32 years. Can you tell me where my contributions went?" A pause. She said she couldn't confirm specific account details over the phone. She said the compliance team would have more information. I said, "Was there a transposition error in my employee ID at the time of enrollment?" Another pause. Then, "I'm not able to confirm that, ma'am. Someone from compliance will be in contact." She knew. I knew she knew. We both understood the conversation was over. The compliance team did not contact me within 5 to 7 business days. They contacted me on day 14, a letter, not a call, informing me that an enrollment discrepancy had been identified and that ASRS was conducting an internal review. The letter was 1 page long. It contained no apology. It contained no timeline. It suggested I might want to consult with the Member Services Department if I had questions. I consulted with an attorney instead. His name was Gerald Park. He had spent 15 years doing public employee benefits litigation, which meant he had seen versions of this before, not often, but enough to know exactly what questions to ask and exactly what records to demand. Gerald filed a public records request that same week. What came back over the following 3 months was a picture I had suspected but hadn't fully seen. The enrollment error had been made in January of 1999 by a data entry clerk who was no longer employed by ASRS. The transposition 47 to 74 had sent my contributions to Ruth's account from the first paycheck. The 2003 audit flag had been generated automatically and assigned to a supervisor who left ASRS in 2004. When she left, The flagged items in her queue were reassigned in bulk to another supervisor, who closed them administratively without review because the queue was too large and the items were too old. $142,000 of my retirement contributions had been credited to Ruth's account over 11 years. Ruth had retired in 2008 and was receiving a monthly pension benefit that included, in its calculation, 11 years of my contributions. The state's initial position was that the error was administrative in nature and that they would work to restore my account, but that the process would take time and would need to be handled through their internal correction procedures. Gerald's position was rather different. He filed suit in Maricopa County Superior Court against ASRS on 3 grounds: negligent maintenance of my enrollment record, failure to act on a known discrepancy identified in their own 2003 audit, and denial of my constitutionally protected property interest in my retirement contributions. He also filed a separate action against Ruth, seeking return of the excess contributions that had been credited to her account and factored into her benefit calculation. The state's attorneys moved to dismiss. The judge denied the motion. Ruth's attorney argued that she had received her benefit in good faith and could not be required to return funds she had already spent. The judge was not particularly moved by this argument. The litigation took 22 months. I want to be honest about what that meant. 22 months of depositions, document reviews, motions, counter-motions, hearings. 22 months of my retirement years, the years I had worked 40 years to reach, spent in conference rooms and courtrooms instead of doing whatever it is I had imagined I would do with this time. My attorney's fees were substantial. That is a fact I include, because it matters when you are calculating whether to pursue something like this. The question is never just, are you right? It is also, what will being right cost you? In my case, the answer to that second question was approximately $47,000. But here is what came out of those 22 months. In March of 2013, ASRS entered into a consent judgment in which they agreed to fully restore my retirement account with all contributions that should have been credited since January of 1999, plus the earnings those contributions would have generated had they been properly invested, pay a $35,000 settlement for their failure to act on the 2003 audit flag, and implement a new reconciliation procedure to prevent future enrollment errors of this type. The restored balance, including earnings, was $198,400. In April of 2013, Ruth's case was resolved separately. The court ordered that her pension benefit be recalculated to exclude the years of contribution that were improperly credited to her account, and that she repay to ASRS, not to me directly, but to the fund, the excess pension payments she had received based on those contributions. This was structured as a reduction in her ongoing monthly benefit rather than a lump sum, given her age and financial circumstances. I have no particular feeling toward Ruth. I have tried to be honest with myself about this. She was not the person who made the error. She was not the person who saw the 2003 audit flag and did nothing. She was a woman who received money and did not ask where it came from, which is a human failing, but not necessarily a malicious one. The system failed. She benefited from the failure. The court required her to give back what wasn't hers. The person I am still genuinely angry at, if I am being fully honest, is the supervisor who closed those flagged items in 2004 without reviewing them. That person's decision to process a queue of old flags as administrative closures rather than actually look at them cost me 22 months of litigation and $47,000 in legal fees, and the first 2 years of my retirement. That person was never identified publicly. ASRS declined to disclose which employees had been involved in the 2004 queue closure. Gerald told me we could have pushed for that disclosure, but it would have extended the litigation further, and the additional information would not have changed the outcome. I chose to close. In June of 2013, I received confirmation that my A-Stress account had been fully restored. The corrected balance was there in the system, under my correct employee ID number. I logged in and looked at it for a while. Then I logged out and went for a long walk. I retired 14 months later, in August of 2014, at 64 years old. My monthly pension benefit reflected 40 years of contributions, all of them correctly accounted for. I have been receiving it every month since. It arrives reliably on the same date, in the correct amount. I check the statement every single time. I spent 40 years telling other people to verify their financial records. I gave this advice to clients, to colleagues, to my own children when they started working. I said it so many times it became automatic. Verify, document, ask for the detail behind the summary. I did not take my own advice. And the reason I didn't is one I think many of you will recognize. I trusted an institution. I trusted that a state agency responsible for managing the retirement security of hundreds of thousands of public employees had systems in place to catch errors. I trusted that if something went wrong, someone would tell me. Institutions do not always tell you when something has gone wrong. Sometimes they don't know. Sometimes they know and the flag gets buried. Sometimes the person responsible for following up leaves, and the task disappears with them. The lesson is not that institutions are corrupt. It is that they are large and complex, and run by human beings who make human mistakes, and that your retirement account, your money, the product of your working years, cannot be protected by trust alone. Here is what I tell people now, and what I am telling you. Pull your retirement statement every year. Not the summary, the full transaction history. Compare what your employer remitted to what was credited to your account. These numbers should match. If they don't match, ask why. Ask in writing. Keep the response. If you enrolled in a retirement plan more than 5 years ago, call your plan administrator and ask them to read back your enrollment details, your name, your identification number, your social security number last 4 digits. Confirm that what they have on file is correct. This takes 10 minutes. In my case, this 10-minute phone call would have saved 11 years. And if you find a discrepancy, any discrepancy, no matter how small it seems, document it immediately. Date, time, who you spoke with, what they said. If you call, and they tell you it's nothing, call again, and ask them to put that in writing. Paper trails exist to protect you when institutions would prefer to handle things quietly. I am 65 years old. I live in Arizona. I have a garden and a dog and a pension that arrives on time every month. I earned all of it, every dollar, twice. Once when I worked for it, and once when I fought for it. You shouldn't have to fight for what's already yours. But if you do, fight carefully, document everything, and get a good attorney. Tell me where you are watching from today. And if you have ever found an error in your own retirement account, I would genuinely like to hear about it in the comments. You might be surprised how common this is. Thank you for being here.